Okay, hello everyone and welcome to KDLounge. We are joined by Colin Digits. Hi Colin, how are you?
I am great. Thank you so much for having me. Pleasure to be here.
It's our pleasure. I was at your show the other time, so it's only fair that we invite you here. And I mean, we also wanted to share your vision with our community. So right off the bat, why don't you speak a little bit about yourself and your background so people can understand how you got to where you are now?
Long journey, but eventful. So I have a performance marketing background, like advertising. I have several companies still that operate that, from software to agency. I've been doing that for the last 7 years. So last year we started exploring software for like Web3 market, to see if that was an interesting idea. But I've always done like the YouTube stuff, documenting my own progress in terms of business, just to educate others. Never really super big, never 100,000 subscribers or nothing like that. Super focused, and just like from a business point of view, for other entrepreneurs, like quite interesting. So when I went into like Web3, I've been in the crypto industry since like 2017. So there is where I made a lot of money with ICOs. And I also lost a lot of money with the crash, right? So then I took a long break. Right? I didn't look back until like last year, February, where it like started to like the whole DeFi and everything was like blowing up. And then I didn't actually get back in because I was selling one of my businesses until like September, which turned out to be the perfect moment. Right? It was just before the crypto gaming bull run. So there, obviously, I made a lot of money as an investor, but I also started to document a new crypto YouTube journey at that time. And that basically, fast forward to 10 months to today, turned into like a 36 people company, 6 different products, and an amazing journey so far.
Funny that it's actually exactly when I started looking into crypto as well, last February. So not last February, the one before, 2021. And yeah, I guess it was when like Bitcoin had gone from 3K to like 40K, I think, or almost 50K. And Elon Musk was tweeting like crazy about it. So, you know, It got everyone's interest again, right? But glad you joined again. And now you get to have your own Web3 project and company. So you have 36 people. Can you start talking a little bit about first the Digits Club project and then go into the team and what the team is and how it is structured?
Basically, I can walk you through the natural timeline. I mean, one of the major things that we do with our community and in general, it's like the transparency is huge for us. So any questions you have on our business, even to how much money we make, it's all public on the blockchain, right? So we have nothing to hide. And it's something I like to talk about because, you know, in the original centralized world, there's a lot of secrets and there's a lot of, you know, people are not allowed to know this. And when you work fully decentralized, every penny can be traced, every decision can be discussed. Governance is a huge thing. So from the YouTube content, basically, I have always built communities, right? I think community is great because if you just keep sharing information publicly, a lot of people don't appreciate it, right? So a gated community, even for free at that time, people have to join the Discord server, do a verification. There's a little bit of a barrier of entry. You filter the people a little bit in terms of conversation, right? So we did that for about 3 months, had about 10,000 people at that point inside that Discord server. And this was basically from like October to January, right? You have a community full of people. We specifically focus on like IDO investments, Launchpads, right? Those type of opportunities. And people were just loving it, you know, sharing projects, sharing point of views in a very respectable manner. A lot of bigger investors as well. So it wasn't really about like meme coins or anything like this. It was really about white papers, about websites, teams, project analysis, really deep. And therefore you also like attract a small percentage of the market, right? Because the content and the conversation is so different from the general should I buy Dogecoin right now, or should I, you know, that type of thing.
And it's like if you go to YouTube, you brush all the influencers, and the videos are all about the same. Oh, it's either Casta or it's this. Now it's, I don't know, Dogecoin because Elon Musk quit, and it's all of them write the same thing. So I think there's a real value to really go deep into projects and try to understand not only if it's a good investment opportunity, but why. Right? Like, what's the future for that project?
I mean, I think it's always healthy to understand as a consumer, the content that we consume, what is the purpose of that content? So for the guys that make top 3 coins to buy now, their purpose is to get views, so they make money off those views, If we would do that as a business, it's not anywhere near the money we make by actually educating people, selling real products, a completely different type of business. And also in the content, I used to make videos which were like an hour and a half long for one white paper on one project, and just give my opinion on it. And you might agree, you might disagree, but at least you learn a lot more than buy 3 coins and you don't know actually what you're buying. It's just like, maybe you make money, maybe you don't make money, we'll see, And I think that really got traction with a lot of people, a lot of serious people, we got bigger investors into that community as well. And the tone was always very focused. So then we had an amazing community. At some point we decided to gate it, right? Because, there's like big investors there. There are certain things that are being discussed, which you rather not have publicly, right? When people say like how much they're investing, for example. So we did layer it. So there was a paid part and there was a free part, right? And that was like an NFT membership. So it's not even that big of a deal. And then we basically started exploring. So I was like, well, looks like a good community. What does the community actually want? Because we have a good team. And I'm an ambitious guy. So, what is the next step? And it's actually one of my personal problems where we were looking at I own a software company. These guys, they weren't developing much, right? It was just like they were maintaining what we already built. And they were like, oh, maybe we can look into software. And I'm like, sounds good. I invest into IDO projects, 100, just over 100 at that time. But we had guys that did like 200, 300 projects. If in like a bull market, if you do like seed, strategic, private, and public, in a bull market, there's so many opportunities, so many projects raising funds that I wondered how they were tracking it. So I had an assistant at that time that kept track of my Google Sheets and stuff. And she just told me, claim your vesting. Because in that bull run period, it's maybe less important to claim your tokens on time. But at that time, it was the difference between like 40% additional ROI if you were the first one to claim and dump, basically. Claim, dump. That was a strategy, right? Get your initial back as soon as possible. It's always one of my philosophies. Right now in a bear market, doesn't matter if you claim now or in 1 week, the token is like, is what it is. But I was like, that could be automated, right? Should be automated. This is like a fucking nightmare process, super time consuming. And I don't know if you do the IDOs yourself, I would assume so. It's like 5 is manageable, 10 manageable, 15 is already, every other day you get a note, you need to check the sheet. I was spending like 30, 40 minutes a day on this.
Yeah, no, I do go into IDOs, never that insane amount. At least in this last run, I didn't go into that insane amount. So, but I do see the value of automating it so that you don't need to, that's, if you have like 100, you might even forget you are in like a couple of them, right? Because at some point there's so many, and it's a hassle to go through a spreadsheet and have to go into all the websites, to all the telegrams to see what's new, and if you have a way to automate it and have
the updates,
and have any kind of backlog of information that you can just pop on a notification on the corner of your screen, right? Oh, yeah,
exactly like that. So I was like, make a database, put the software, put it in there. So the software tracks everything that you enter, right? You need to enter it once, 9 fields. It tracks the token. It integrates with Google Calendar, so you get notifications 10 minutes before you need to claim, 1 hour before you want to claim on your phone, and then you claim. You only have to spend time on it once. You can register the sale, and you can see how much money you made per blockchain, per Launchpad, which round, which creators of which projects. I think for a serious investor, if you do one project, doesn't really matter that much. If you made money, that's good. But if you invest into like 10 different Launchpads or whatever, you want to know which Launchpad has the quality. The all-time high access that they show for their projects, that's marketing stuff. We get it. But we want to know, I want to know how much I made. not what other people made.
Of course. And this is your Track Digits
Yes.
offering, right? This is that software is Track Digits, which is part of a big ecosystem that you have. Before we jump into the ecosystem itself, one thing you mentioned just briefly, the size of the team. So how many were you at the beginning, and how did you expand?
Well, that's the perfect question for this moment, because the Digits Club, which is the two of us, right? We had a great community. So we got like 8 moderators from the community. So basically people that said like, we love this project, we love what you guys are doing, we want to get on board. And they basically took care of all the moderation, the engagement, everything on the community side of things. So we can actually build, right? It's very labor intensive. So then we started to move some developers from the software company to the other company, and it's like legal stuff, right? So although it might sound easy, it's not that easy, because these are separate entities, right? And separate people have separate interests there. But we moved them. They started building Track Digits. There was only 3 guys in the beginning. And as soon as those assets were built, so Digits Club was deployed and Track Digits was in beta testing, that's when we made the decision, like, we see so much opportunity. Everybody is basically loving it at this point, let's scale. So then we basically quite rapidly scaled from like 7, excluding the mods, right? To like 22 people. That was like the first big hire spree. It happened in like 6 weeks. Because obviously I have a lot of contacts, right? So I can just basically take the right people in because I know them or they've already been interested. And then we basically pushed out 4 more products in 4 months that way. And the team is all remote, so it's super agile and like specific expertise. One of the main things I see, which I love about Web3, is so many new entrepreneurs coming into the space, building great projects, but also making a lot of mistakes. And we should allow them to make mistakes. But like our executive team, so we have 3 executives, and the combined experience is 54 years. You know, like that's, and for me, it's only 10 years, like 7, 8 years. So the guys, they're all end 40s, right? They're more corporate guys, right? With a lot of entrepreneurial experience. And I feel like that is basically the main benefit of our ecosystem. It's a lot more serious, not your standard like degen project.
Yeah. Are they doxed, by the way?
Yes, but it's required by myself. So for everybody on our team, it's all doxed with like LinkedIn, Twitter, everything basically, but everybody's also on camera. So all, not everybody, you know, some developers aren't because it's not relevant. But even in our company meetings, you know, like I always want all cameras on, specifically even when I talk with partners or whatever, because, you know, you want to see how people react. Ultimately, you want to know who you're talking to.
I always prefer that to have cameras.
I can respect it if people have a different vision on it. Like I don't mind personally. We have partners that are not doxed, right? But as long as I'm doing a meeting and I can see them, I like that because in certain countries, there are quite some regulations and still some shadiness around crypto and Web3. So depends on where you are and what you're comfortable with. But at least for me, I'm on YouTube anyway. So people can't see me, right? So there would be no reason not to show my face. But in our light paper, we have all the faces of all the people, transparent.
Yeah, I'm seeing it.
A big thing for us.
Here. Amazing, man. And now that you've briefly mentioned as well various projects or products that you are offering on the Digits Club, you want to go over all of them or just
let's do a quick summary. It sounds like a lot, but when it comes down to it, it's like basically one ecosystem, right? So there's like basically a dashboard called Digits Mainframe, and that's where 2 of our NFT collections come together. So the entry key for our ecosystem is an NFT. So those are staked on the mainframe. On the mainframe, you get something called Digits Coins, which is a offline currency. So it's not an actual token, it's just for our system. And you can send those coins to the different products that we have and utilize them for free in that scenario. So you have Track Digits, which is obviously a software, Digits Club, which is then a membership alpha group, we have a product called Digits Pad, and you can see digits everywhere, right? It's like the company is called Digits Brands above it, so it makes sense that everything is called Digits.
I gotta say, it's killing me that it's digits, and then you have track digits. Why not Digits Track, man?
Digits Track. The thing is, we set it up. It was called Track Digits, and it has to do with like copyright, trademarks and stuff, right? So that's funny because the Digits brand is only something that came last, right? So we had all the products and then Digits brands because you represent the entire thing.
I see a pattern here. I'm not sure what it is, but I see a pattern. And it's something that we would have to make coherent, right? Ultimately, it only makes sense as a brand. But yeah, the Digits Pad is basically a Launchpad, quite interesting, but it doesn't launch projects itself. Very important. So because we have such an extensive network, because ultimately the community, how it is right now, is 95% IDO, private round, seed round investors, right, in our community. So we have a lot of connections with VCs, launchpads, and because we have so many products, it's not, to be fully transparent, it's not profitable enough to just run the launchpad and scout the projects ourselves. Too much risk, too little reward. But what we do see is that other launchpad that want to do like a 200K raise, and they could have done a 250K raise, but they might not fill it. So we tell them, okay, sign off on the 250K raise. Let's see how far you can fill it. If you cannot fill the 50K, then give us the 50K and we'll fill it. And we fill it in 1 hour because our guys are ready. But then there's no requirements. So no staking requirement, no nothing. We take care of our pool on the different terms, right? So that's why we launched that product. And obviously, they're super high allocations. They're all vetted investors. We take care of the KYC requirements ourselves if there's KYC for the partner, right? So in that case, the investors get what they want, right? The Launchpad has a huge benefit. And of course, we support them with the entire ecosystem. We have like YouTube stuff, etc. So Track Digits, Digits Club, Digits Pad, and then there's a treasury. So that's called Digits Treasury. It's like your classic treasury. It's not, in my opinion, not that interesting. Buy NFTs, hold NFTs, sell NFTs, pay out dividend. Okay.
Very
your
simple model.
Your typical revenue share with the community, so to speak, right?
Yeah, it's like some passive income idea which the community really liked, which I'm not a fan of personally. Right, it was also not that complex to build, but if they want it, we listen, right? And that's, I think, the main storyline through what we've built, why we've been able to build 5 products in like 6 months. It's basically because we did it together with our community, right? And I know that a lot of companies are very tight with their community, but it's like the community built the business with us, right? Because building it is one thing, but
you're one step closer to Digits DAO, almost there.
Yeah. Oh well, there's a governance on the mainframe. So they basically decide. So ultimately, they don't decide what happens, right? I decide what happens, but they can send in proposals and we vote. And it's again like a weighted average based on the amount of NFTs that they stake, like that type of stuff. So it's centralized, and I never want to make it fully decentralized. But there's a lot of Web3 decentralized mechanics there to ensure the longevity of the ecosystem. And I think that's very important. I see a lot of these 100% decentralized mechanisms, but governments and rules will change when it comes to tax, because that's what they like. And then these projects might not be as viable, and we might need to shut them down. So we try to keep a balance there. There's a whole argument. I like to discuss that with people, but it's like a whole discussion for a different moment. But it's like, bring as much decentralization as you can, because that's what the people want. And some things, because of legal perspective, you just got to keep realistic as well. But the main focus is the value, right? The value proposition just becomes bigger if you can stack assets. If I have a company that I like, right? Well, take for example, you guys. You're coming with multiple assets. Well, it's a good example because I don't want to take myself as a continuous example. You guys have one asset, then you have the DEX, which is like adding value to like an existing part. So what is better for a user to use a party that you already appreciate and like, and then utilizing more of that and trust, instead of scattering. So that's basically the feedback we got. Like, there's so much trash out there, and there has to be, because it's an innovative space. There will be good projects, there will be less quality projects. It's normal. But if you find yourself a good party, right, and not like a party, but like a good company to get involved with, then yes, of course, the offering should be as wide as possible, but then of course should be realistic enough to not spread yourself too thin.
Yeah, and right? So the scope of your capabilities, of course, you don't want to try to do everything, right?
That's why we don't have a DEX, for example. Exactly. We're really focused on the Web 2 models and apply them to the Web 3 market, but not build in the Web 3. Right, so we don't do much blockchain work. So the ecosystem we have, basically, when the NFTs yield the coins, you can turn the coins into an NFT and you can sell them, and then upload the NFT, and then you migrate from user to user your balance, basically. So that's basically one of the only integrations we have with the blockchain. Now, of course, the Launchpad to pay the fee, right? The contribution of the allocation. The Track Digits software has some blockchain requests to pull in some information, but it's not that we're actually building software for Web3 specifically, or tools like that.
There's a market for that. There's people that prefer it that way. There are people who only want decentralized stuff, right? They don't want anything that's centralized. But a lot of people don't mind a little centralization to get access to easier steps, because let's face it, doing everything on chain, it's not easy, it's not cheap, and so I think there's place for both worlds and for both kind of products, so to speak. So one thing I wanted to approach with you, that it's kind of the reason that brought you to this show, is why and when did you start noticing Kedia and bringing it to your community attention?
It's one of my favorite stories. I think I told you about that before. It was actually one of our first major partners, Unix Gaming. They have a huge gaming guild and like a Launchpad and everything, like a full ecosystem as well. So these guys, we had a conversation with them, and they basically had a call on Kedia where it was like, I don't know, 36 cents or something, and they want to throw in like a couple $100,000. They didn't, and then it turned out to be a huge company history dilemma, right? And that's when I picked it up as well, like, interesting opportunity, starting to dive deeper into it more and more. So I was looking at two chains at the time, Oasis and Kedia, right? This was last year. So I already missed the boat, right? Because it already blew up. I think at that time it was like $17, something like this. It really, like at some point it went up really, really fast. I don't know the exact amount, but I missed the boat, like for the initial.
It went like from $2 to 28 in like 3 weeks or 4 weeks.
Yeah,
something crazy like that.
And I was like way later when it already went down. So, but the main interest for me was, I hear all these stories, means it must be interesting. Right? Let me do the proper research, which I always do. That I found, which I didn't find on Oasis, which I thought was interesting, is that, technology is cool. There's a lot of ambition. That's all important, right? But the main thing comes back to my philosophy, which is community, right? And the insane amount of dedication and support that the Kedia community has on Twitter, on the Telegram project, the products that are being launched. There's just so much support and so much passion behind it, which that got my attention specifically, because that's never a bad thing. No. And then it turned out to be super consistent as well, which is even better.
Yeah, I think Kedia in particular, the community support is very structured on the ethos of the blockchain itself. Like, it's the scalable proof of work. So it's like the one thing that no one else has. It's we all are driven to proof of stake initially because of the ecological concerns, because we don't know enough to understand what really means to be proof of stake of proof of work. And I think when people realize that this is actually what Bitcoin and Satoshi had envisioned for a blockchain, which is a scalable proof of work technology that doesn't rely on people's power to work. Like, you don't have to already have a lot of coins to participate in a network.
Right.
And so when people realize they love the project and they are really committed to it and they really believe in Kedia, and you see that in the community on Twitter and on Telegram.
Well, what I'm saying is how you just explained it. It's the perfect example, right? Because I'm not that passionate about Kedia that way. I'm passionate from a money point of view, right? Because I'm an investor at heart. The whole blockchain technology, I think it's cool, but doesn't really. I'm a business guy, right? So we build great products, and the blockchain is great, but as a business opportunity for us, right? And the technology behind it, whether it's Ethereum we use or Polygon or Kedia, for me it doesn't matter that much, right? It should work, and it should work properly. And what I like is that most of these arguments or hypotheses still, right? We need to see if it actually works on scale. But that's what I like, because how you explain it and how every person that I talk to from Kedia explains it is they're so in it, right? And that's their passion. They just feel it. And that's what I have with other blockchains where I don't see that, right? Where it's like, it should work like this and we hope it works like this, right? That's different than we know it will work like this, right? Even though you don't really know, but it's like 100% confidence that it should work and we're going to get it. And I think that's important, to get it from 0 to 1, but even more important to get it from 1 to 100,
True. Yeah. And keeping on with the same theme, what was the reaction of the community when you brought up Kedia and Kedia projects?
It's the opportunity at hand. Right. So it's specifically focused. I think the reaction from the community specifically looks in, of course, you want to be early, but you don't want to be too early. Right. So if you're too early, you expose yourself to too much risk. Right. But if you're not early enough, the big trend has already happened. So we did see, obviously, the spike that you briefly mentioned. And now, because of the bear, you see a downtrend. So you get that opportunity again. But if you now, in this opportunity, don't take it, you're a fool. Right? There's two different things, because before you didn't know, you can't blame yourself for things you don't know, because there's so many things happening. But now you do know, and then if you miss it again, you're a bad investor, basically, right? if you believe in it, that's it. Yeah. So I always follow like a dollar cost average approach, because it's the easiest thing for me to do. Keep track of everything properly, slowly in, slowly out, or at least that's what I try to do. And of course, the emotional aspects always play. But so far on Kedia, it has been quite fruitful when you look on it on a bigger scope, right? I always look at it from like a basic point of view. If it has gone so far, it will likely go further if the crypto market, as a whole goes further. We do believe in that, so therefore I also believe that Kedia can reach the previous all-time high again.
Yeah.
Because if it's like, a market cap of maybe 10 million, then it might not recover out of the bear, but it has already de-risked itself that way.
Yeah, that's true. Especially with such a strong team behind it, right?
And the amount of projects that are being built.
Yeah. So, as you said, you focus a lot on Launchpads and bringing Launchpad opportunities to your community. Just to wrap this up, what do you look for in a Launchpad? What recommendations do you have for your users when searching for Launchpads?
Well, so from a user point of view and investor point of view, so specifically for the users, there should be an awareness that Launchpad tokens hold risk relative to the projects you participate in. So that's a trade-off, right? So in a bear market, these tokens lose value. You still need to stake them to participate in projects, and projects tend to likely go up in a bull. So that trade-off on that ratio is how you make money, right? And then on the other side, I only truly believe in projects with utility. So if there's no utility for the token, then I'm not interested. If there's utility for the token, but the utility is staking, I'm also not interested.
That's
right. It has to be something that is consistent, because if we look at this bear market or on a scalable level, then cash flow is what keeps a business alive. And if there's no utility for the token, there's no cash flow. And that means that the funds being raised, at some point, they're gone. Right. And that's what I see with a lot of projects in this bear market, because last year was so easy to raise money. Any project would get funded, that they don't allocate the funds properly because they don't have experience with managing large amounts of money. Right. And now some of these projects have gone quiet for like the last 6-8 weeks because they're panicking about their cash flow, their burn rate. Right. And that's something funny. I had an investor call, like I think a week and a half ago, and one of the VCs asked us, like, we're not even raising money. It was like a group call. It was like, oh, what is your like your burn rate and how many months you could go. And I'm like, we could go 8 years, right? It's like, but the thing is, if you have an executive team with the experience that we have, and you would say 6 months, then it would be a disaster, right? But of course, the advice would be, if you have so much liquidity, then you might want to take more risk, right? Yeah. Or scale faster. It's not only a good thing, right? Because we're a business ultimately, but at least good to know that when I talk with some of these NFT projects specifically, right? Or games, it's like, if a game says like, we're going to raise 16 million to build the game, it's going to cost at least 25 million to build the game, right? Because you underestimate the cost and you overestimate the capabilities in what you can do in a certain amount of time. That's like classic business principles, right? And I love these guys that are 20 years old. They raised $2 million. They fuck everything up. But the question is, did you learn something? Right? Because it's a good thing for you that you did it with other people's money, and it's a bad thing for you that you now owe them the responsibility of telling them you fucked everything up.
Yeah, it is what it is, man. And that's something I truly believe that, and this is why we do extensive research. I don't want. We always know there's a risk in investing in this kind of venture projects, right? There is risk, but we want to minimize the risk for our users as much as possible, so that they can feel safe and know that if the people who are behind the project do fuck up, they at least will be open and honest with them and tell them, listen, this is what we've done. Now we will have to rebuild, do something else, whatever. Last question. So this is what you look for in Launchpad. This is what you search for. What would you change on KDL? What do you think is good and bad in KDL?
Interesting question. I think in terms of the offering is very selective, right? High utility projects. I always wonder on a Launchpad point of view for the users and obviously for the backend profitability. I see that the Kadena Launchpads only launch Kadena. Right, it's interesting because you could scale broader if you would want to, but I also think that one of the things I primarily like is the build out of an ecosystem, right? So if you would add the DEX, or if you would add another tool that makes sense as a business, but also for the users to lower the barrier of entry to explore Web3, I think that's extremely beneficial. One of the things that I never like on Launchpad is tiers specifically, because I have a sufficient capital. Let's put it at that. So I can afford the highest tier in any Launchpad. Yet I always end up at VCs, right? Because they can offer like a different model. So I do understand the options, but like a weighted average on a wider token utility, it's very complex. I can debate it for hours, but
it's very hard. It's one of the hardest parts of Launchpad is having a fair allocation system, I think.
Yeah, so I think staking a token to get allocation, I don't think that's the future model. I think that will change, and therefore Launchpad needs to find a new utility for their token, or not have a token and find a different way to raise money. So I think that's like an interesting debate, and I'm not really sure how that would work yet, but we're attempting something with DigitsPad, and it might not be the right thing. We still have to test it as well, but we're following.
It fails as long as as long as you tell
it. Like we went with an NFT approach. So we sold NFTs to raise funds, right? And then you stake an NFT to get allocation, but yet it's not the best. It has its own problems. Right, and that's what I like to
discuss. It's not very different from staking a token, right? It's still an asset that you need to stake.
Yeah, the NFT has a capped supply, which is a lot lower, right? But it's illiquid at the same time, which is also quite difficult. So it's still performance-based. And I think that from an investment point of view, the performance should be there, but covered by a whole organization and not just the pad. So when you would add in a DEX, which has utility for that same token, you reduce that risk level, the floor risk. Right? And that's where I'm saying then, yes, you can stake, but if you have only a Launchpad and you stake, you expose the investors to too much risk, or at least that's my philosophy. And that's why we have 6 assets breached by one collection. And when you would have 2 or 3 assets, from what I've been hearing, for one token, then yes, you reduce that risk. And that's what I see where the future is at, because we can all see in the bear market, the Launchpad is the number one or second biggest losers in a bear,
Mhm.
because the whole business model functions on launching and incubating projects, but the TGEs don't happen and the pools don't get filled. The sentiment is down. It's like a death spiral almost.
Yeah, yeah. Thanks for the input, Colin, and thanks for being here with us and sharing your
Thank you for having
experience
me.
and knowledge. And let's do it again in the future when we have more to share. Would love to have you back here.
More projects.
Yeah, of course. Hopefully in the bear market, eventually.
Slow and steady is important.
In the bull market, I would say. Bull, not in the bear. Oh God.
Slow and steady, and everything will be fine.
Of course, man. Of course. Thanks. Anything final you want to share with?
No, I appreciate you. I love what you guys are doing. We'll definitely be in touch, because obviously 1, 2, 3 months from now things have changed. I think it's always good if you like somebody, you know, have a good relation there, then we should keep that going. I think everybody would think the same that is watching this right now. So thank you for watching as well, and thank you for hosting me today.
Okay. Thanks again, Colin, and to all of you guys. See you next time.
All right, cheers. Bye-bye.